Hey everybody, hey traders, Chris over here. This is a A1 Trading Pulver Alerts weekly outlook. It is just before 1 p.m. on Monday the 15th. All eyes on the Fed this week. That's really where price, volatility, everything's going to live, is what happens Wednesday afternoon with Jerome Powell. Here is the Fed Watch tool. 96.1% chance that the Fed is cutting rates. Not the big jumbo cut like this popped up on the radar a couple weeks ago. It is pretty much a 25 basis points cut with the expectation of future cuts out 6 cuts to the end of 2026. We would be cutting fairly aggressively through the end of 2025. September, October, and again by the end of the year in December. Maybe one more cut early in Q1 of next year. And then by the end of the year, 2026, we're down, 6 cuts around 25 basis points each. So market's expecting about a 150 basis points chop to the Fed funds rate going into the end of 2026. Now, why do I say this all matters for this week? Because it's finally here. This whole idea of, the free mileage the Fed has gotten, the pressure that Donald Trump has put on the Fed and Jerome Powell and saying they're too little, too late, it's way too far behind, blah, blah, blah. We're costing taxpayers and Americans money, whatever. It's noise. However, we are here. It is coming this week. I think the markets are likely to use FOMC for a big volatility event. I am cautious, obviously, like I've been the last couple of weeks with where this thing kind of shakes out. We are up. I mean, the month of September has been a surprisingly good month. Historically speaking, if you look at your Edge Finder, you know as well as I do that the historical performance of September is not great. So on average, September is a down month. For the last 10 years, September is one of the few down months, which leads me to believe that I think we go into some type of either wick high and a large reversal into like a very small body for September, or we finish the month higher for September. Somehow we maintain this push and then we give some back in October. I just think that there's volatility coming. We got through PPI data, CPI data. We got through a non-farm payroll announcement. None of those data points were great, by the way. And here we are coming into the Fed with a rate cut, and it's finally here. What might benefit from this, and this has probably been one of my favorite index trades, since we've had such a run up to all-time highs on S&P and NASDAQ, the Dow's reached all-time highs. The Russell still has the catch-up trade. I think the Russell could possibly benefit for a decent sustained run to all-time highs. We're close on the Russell right now. So let me go back to Edge Finder, go back to our seasonality report, and you'll see here that September is usually the rougher month as far as performance. So let's go to seasonality. Let's go to monthly. Let's go on S&P for the last 10 years average. All right, so negative 0.73 is the average 10-year return in September. We are up over 3% or very close to 3%. Let me check. So from the start of the month right here to current prices, today is another all-time high. We're up over 3.33% for September. I'm not saying we can't hang on to these gains. I'm just a little suspicious with what I see on the technicals on the smaller time frame, like a daily chart and a very long bar count since we've hit this 50-day moving average. I think this is kind of the perfect crescendo into a bit of a seasonal chop zone or a seasonal pullback. I think that 3 to 5% is reasonable. I think a little higher volatility could maybe spike us up to a 7, 8, 10% correction. I don't think this should derail traders' agenda to stay bullish in the markets. I'm still bullish. I want to get some dips and pullbacks. It's that simple. So the Fed could kind of lead us there as far as buy the rumor, sell the news. The market might not like what Jerome Powell has to say. Maybe this is taken by the markets as like a hawkish cut. Maybe this is like a necessary cut. Like, hey, look, we told you we're going to cut, so we did, but we're still cautious and watching. We understand the labor market, blah, blah, blah. Like, it just depends on if it's like we're dovish forever, or maybe there's a bit of a hawkish tone. Let's see how the market reacts. And more importantly, as always, price action matters. Okay, where am I getting concerned? If the markets take out this low or this low, well, that's a reasonable correction. We want to see prices, if we sweep those lows, start to trough out pretty early. Like this previous all-time high, that's possibly as low as I'd like to see the markets go to maintain this kind of bullish posture. I think things get a little bit more questionable if we get below this level and we don't immediately bounce back up. So if we start to kind of roll over and roll over and roll over, maybe just waiting for a trend line break, maybe trading some of the option strategies that I'll deploy for my Pulver Alerts, getting wide margins for error, and then seeing if this market can find some dynamic support between all these moving averages. And maybe this is setting up kind of the high for the year, but if we have a correction, that at least gives us a chance to try to get back to those highs by the end of the year. And if it goes higher, great. but I'm looking to see if we can get some dips and pullbacks to reposition. Okay. So let's keep an eye on the Fed. Earnings wise, Oracle had a big news last week. Google's up to all-time highs again. I'm fading some of these moves, but not a ton. I think you're silly if you're trying to fade AI. I think you're silly if you're trying to fade the optimism the market has clearly shown us so far. And also, one thing that continues to push this market higher is probably the reality that most funds and most institutions are underweight equities. Most portfolio managers are underweight equities, and they have two choices. They can either double down and short the market, or they can continue to stay underweight and underperform the market.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
I'm guessing that these are smart people, smart tools, resources, smart observations, and I think doubling down and shorting the market is probably not the best strategy. So I would imagine that the easier strategy is adding allocation, continue to add exposure, strategically, not crazy, not jumping into all-time highs, but adding exposure at current levels, dollar cost averaging in maybe over the next 5 or 10%, getting some pullbacks in the market, and having a better allocation, having more exposure, but also getting it kind of lightly with some corrections and pullbacks. From there, getting back to proper weighting, getting back to all-time highs, and we'll see if that is money coming off the sidelines to go into the equities market. So I still think that the tail risk, realistically, you go to the watch tool here. If you look at sentiment as well, AAII sentiment continues to remain extremely bearish, which is insane to me that the sentiment is this high. And I say that because if this bearish sentiment continues to be this high, it is a contrarian play. If you are this bearish in sentiment, you are probably going to be wrong. So I think that the bulls still have the upper hand, and the pain trade is squeeze out this bearish sentiment and make them pay the price for thinking that the market can't go higher. And until this switches into, now all of a sudden it's only 30% bearish and it's 45% bullish, that's when I'd be more worried about a top forming. But if this is going to maintain high bearish sentiment, it's crazy. It's crazy that people are this bearish after the market has gone 37% from the April bottom. So I just think that the pain trade is more bulls, more bullish, more drift, more melt up. Don't fade AI. And I think with companies that are, we have companies now that are making these big runs, stretching into $1 trillion market cap. Google's now $3 trillion. Oracle for a moment last week poked up to $1 trillion, got into the top 10. The market cap stuff just continues to get bigger, and it's happening on the coattails of already large companies getting these huge jumps, these huge positionings. Demand for AI just is insatiable. So I think the pain trade is up. I want to see some pullbacks. I want to see some dips. I want to see corrections. I'm not bearish on those. I'm just waiting for those opportunities to offer up pullbacks for me to position for. So expect that coming from me in the Pulver Alerts. I'm putting out trades that are kind of out of the way, out of the money right now. I just put in a trade for XLE, which is an energy play. I'm selling puts from margin accounts. I'm doing a ratio spread on my IRA accounts. I think that energy is a sector that will continue to perform well. If you look back into previous all-time highs, all-time highs are on 101. There's still some upside. We're trading at 88, so obviously getting back to all-time highs would be decent. That's about a 14.9% move to get back to all-time highs. What I'd really like to see is it possible that we break these highs and continue to go higher, similar to what we've seen on XLF, right? We break these recent all-time highs and it's stretch. XLF going higher by 28%. Insane. A financial sector is trading like almost a meme stock. So pretty wild stuff out there. I'm still trading with a lot of margin for error. I want us to be mindful that And that's all we can do. Just continue to grind, continue to position accordingly. I think the pain trade is more upside. I think the volatility comes in this week with the Fed, maybe a bit of a shakeout seasonality-wise. Maybe September's candle gets a little rocky, maybe a long wick to the north. But for the most part, staying on course with any dips, any pullbacks being bought. I personally like a 3, 4, 5% correction before I get a little bit more aggressive. I would say even better would be in the 5, 7 to 10% correction. Certainly good opportunities to see a nice high VIX, sell some premium, try to capitalize on that, stay out of the way, give myself some wide margin for error, and that's how I'll be positioning in my Pulver alert. So we'll take a look at everything this week. I should also be jumping into the team and joining some morning sessions here. Now when we have like US prints or US news prints in the morning, I'll be jumping on for a brief session. You'll see more videos from me, more content, and looking forward to our big push in November for kind of end of year forecasting going into 2026 as well. So you'll see more of me. So just look for the Pulver alerts, look for updates, and we'll continue to grind. I have made several all-time highs in the portfolio this year for the last couple of weeks. So I know we are hitting, new all-time highs. I've been going right along with it, but I've been making all-time highs in this market well before we actually broke them. And I'm just continuing to enjoy a bit of that melt up. I want some pullbacks. I want some dips to position for. I'm not bearish. I'm looking to cushion and catch some dips, pullbacks, retracements in the coming, hopefully 30 to 60 days. So trades are coming. We'll watch. Happy trading, lots of profits. I'll see you all soon. See you in live sessions. All right, take care. Bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.